This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview.
So, I'm sitting down with Paul Jophnson, the CEO of Power Meta Resources. Good to be back in person, Paul. It's been quite a while.
Yes.
You look a bit different to what I'm used to seeing on Zoom, but it's great to be sitting down in person again.
You're in Farnborough.
Yeah, in Farnborough.
The epicenter of the world resource search.
Indeed, Power Meta Resources head office.
Yeah.
So, there's a lot going on in Power Meta Resources. The portfolio is vast. And at the moment, we're in August, where people tend to be on holiday and the volumes go out. But what are the key catalyst points, do you think, in Power Meta Resources? What's going to make investors money?
Yeah, it's what they're wondering at the moment, isn't it? That how are they going to turn their diminishing pots into much bigger sources of capital for themselves in the future? I get that because I've lived this world now for a dozen years in the junior resource space trying to make money. And it's gone very well overall from a personal perspective, but there have been patches in that 12 years when it's been incredibly difficult. And this is one of them. I don't think it's that bad, to be honest. I've been through so many of these. I'm just quietly getting on with my personal work and, not doing that much dramatic investing because I'm focused on what I'm doing with power. But I'm very optimistic for where we're going. In terms of Power Metal, our drivers for the share price are going to be discoveries. Every day of the week. It's what we've set out from the beginning in February 19, that we were going to build a portfolio and build a business structure behind it that can yield multiple discoveries. And that's the thing that will lift our price, I think, more than anything else.
So where are these discoveries going to come from then?
Yeah, that's the famous question that I think most directors try and avoid because they don't want to show favoritism to any, one project or put too much hope on anything in particular. We're fine, I think, now because we have that portfolio approach, so we can talk about a number of our interests as leading the race, as it were. My crystal ball is a bit foggy. That's a phrase I learned from Terry Grammer back in Metal Tiger days when anyone asked him about what was going to happen, specifically in a part of the business or where a discovery would come from. But we've got a focus on district scale opportunities. That's where our big discoveries, I think, will come from. We've done lots of work around the world with North America, Africa and Australia. But most of our advanced projects, as it were, are in Africa, and there's some in Australia as well. So let's look at Africa first. Well, the popular project at the moment where most people think there is a good chance of success, and they would be right, is the Kalahari Copper Belt that we have in joint venture with Kavango, where we're showing some fantastic preparatory exploration leading up to drilling, and we're looking to drill those targets in the South Ganti project as soon as possible when we have the environmental management plan finalised. What's perhaps missed, though, are some of the other projects where there have been, there has been lots of work done over the years. So, Ditau project in Botswana that's held in the joint venture with Kavango. Favourite of mine for many years, never really managed to be as successful as they hoped, but we've got new targets, we've got a new exploration methodology, and we're about to embark in due course on drilling Ditau again. So I'm very optimistic about Ditau, and that's the rare earths focus project. Tati, the new project that we've just exercised our option to earn into 100% interest, which is near Francistown, a little bit further in the northeast of the country from the Kalahari Copper Belt. And we've got some very strong gold and nickel targets there, and our plan is to drill them this year. Quite soon, hopefully. So that's another one where we think there is big discovery potential. There are other favourites that people have talked about in recent months. One is Malopo Farms, where with 500 metre deep holes, the kind of thing that juniors don't engage on, we were able to confirm the geology. We were able to find significant nickel intersections. We're very fortunate. You don't, with 3 holes, generally get the quality of information that we have from it. We found the commodity we're targeting, nickel sulfides. Now we need to vector in and go and find that big deposit, but very optimistic there. And then Hanetti, of course. Good old Hanetti with Katoro Gold, our joint venture partner, where we are desperately eager to see that drill program running. We think on discovery there could be a tremendous amount of value. So Africa, lots going on.
So there's work going on now then on the ground?
Yeah, there's work going on either on the ground or in preparatory desk-based exploration across every single one of our projects that you see in our project role. Some is more active on the ground than others. I think we're planning for half a dozen drill programs by the end of 2021 across our business interests. So a hugely active period.
So really the rest of 2021 is going to be very important in Power Metals' journey?
I think it's make or break from my perspective. We built this portfolio. We're about to drill across this portfolio. Obviously, we've talked about Africa. We've also got Australia with the Victoria Goldfields. We've got multiple drill targets emerging there. That's a joint venture with Red Rock. We've got the new vehicle, First Development Resources, that we're waiting for the grant of the Walao license to enable us to do that acquisition and then move on, spin it into its own vehicle, separate IPO, and then go for some of those deep Javieron style targets, which doesn't get much conversation at the moment, but should do. And then skipping over to North America at Golconda project, where we're just waiting for the permits to come through to do the work. The preparatory work will be done. This is high grade near surface gold that we hope to move into drill programs as soon as possible. And that's part of Gold and Metal Resources package, which is again another spin-out vehicle. So there's lots of activities. It's almost on the edge of confusing, I think, for the investor base trying to follow this story. And it's a difficult balancing act for me as CEO to make sure enough information comes out as we make progress without overloading the market. And it's one of those messages that does come together as the story starts to build and the successes through discovery start to happen.
So on the understanding of investors, how they understand Power Metal Resources, you have your direct projects, and then you've also got the spin-out model, and you're going to be spinning out the Australian projects into their own vehicle and also the North American projects as well. So can you just perhaps explain that spin-out model? What are the benefits to Power Metals and therefore shareholders having projects put into their own vehicles and looking after themselves versus direct project interests under direct control?
Okay, so the normal model in most of the financial markets in the junior resource space is that you have one or two or three projects and you raise money from the market. And then you go and do some exploration and some drilling, and most of the time you never find anything. It's just a great story and the share price moves up and down. In our case, I'm a chartered accountant and I've worked in risk management for most of my professional life. So I'm always kind of switched on to, well, it's all right saying you're going to build a project portfolio and you're going to make discoveries, but to get there requires so much more. It requires underlying administration in the business. It requires coordination and control. It requires financing. And that is the Achilles heel of most junior resource companies, is financing. Because even though I might believe that we have a 5 to 10 year run ahead of us of major growth in the resource marketplace, commodity prices and the demand for junior companies and the valuation of juniors. Now, over that 10-year period, if that comes true, there will be multiple times, just like now, where you get this attrition in the space and people worry about finance, they worry about whether they'll ever make money again in the junior resource sector. And that's the time when it's difficult to raise money when you go cap in hand to the finance institutions. They run a mile. And you've got to be balanced in your approach. You've got to stay robust financially at all times, which is what we've done in this business and what we will continue to do. And it's good to have ways to raise capital into the business without just going cap in hand and doing financings. So accepting that financings are the normal underlying way that the junior resource space pays for itself, you can also invest. So not so much trading, but you can try and build a portfolio of financial assets, which is what we've done with some of our deals. The Kavango deal being the perfect case in point, where we've turned that original £38,000 investment back in April 20 into something which is closer to £250,000 of value today. And you can make money from that investing process. But it's quite hard work. It's worth doing it if you make the big returns, and we've done well so far. Also, you can spin out some of your interests. You can crystallize some of your interests. Now, really, spin out is a specific term, but I'm including disposal of assets. So if you find something of real value, I think there'll be an appetite from bigger companies to acquire projects off juniors that have real geological merit. And I think that will be an avenue for us as well. But for now, we're focusing on spin-out. So taking parts of our business, bundling them up, advancing them to a point where real value can be recognised and putting them into their own vehicles on the market. That protects us as a company because it creates a core underlying financial value to our balance sheet, which is bigger and better than most of our peers. And over a period of time, I think we can build that into a dramatic amount of money if we're fortunate. Now, I don't want to be sat there with £100 million on our balance sheet in half a dozen spin-out vehicles. I just sat there thinking how wonderful as a CEO I am. I recognise that there comes a point where you only need so much capital to run your business. And when we have an excess amount of capital, we've already stated our objective is to look at tax-efficient ways to distribute out some of those interests to our shareholders so they can benefit too. Now, there's a selfish angle to that because the board of Power Metal are the largest block of shareholders. Board and connected parties have 10-11% of the company. So it benefits us to get distributions of our own corporate assets as well. But make no mistake, this spin-out model, alongside the investing side to our business, alongside anything else that we do, is secondary to making major discoveries. And the spin-out model and everything else is designed to put us in a position financially where we are charged up so we can make big discoveries. That's the main focus of this business. Always has been, always will be.
And when you talk about discoveries being the main catalyst event, which it is, that is what excites investors and makes a company really. I think when the project is a directly owned project, it's more tangible, I think, to shareholders within that company. And you've talked about putting real value on the Power balance sheet, doing the spin-out models. Are you looking at this more from an accounting point of view? I mean, where can investors get the real value? Where's the real value coming back from these spin-out vehicles into Power Metal Resources and therefore shareholders?
Okay, well, the value first is it makes us secure. Having a bigger balance sheet, having optionality on where we can raise capital from, whether that's financings from the market, trading and generating profits in our investments, or whether that's taking a spin out and disposing of a small proportion of that stock to generate additional capital. The other advantage of spin outs, of course, is that we want to hold our spin outs for as long as we sensibly can. If a spin out goes on the market and we immediately dump our stock, no one will trust us. Now, if that spin out goes on to increase in value 20 times, of course, people will expect us to dispose of some, potentially all of our stock with such a massive increase in valuation. But in the meantime, we have to hold. But what we can do is use spin outs as currency in the future as well. So if we're doing deals in the future in 2 years' time, we can offer a new project vendor 1 million shares in Power, 1 million shares in XYZ PLC, a spin-out vehicle, and $50,000 cash. So we can use it as currency. It does create wealth that we can deploy in our business on a day-to-day basis. But building the balance sheet is an accountant's view at first, absolutely. But there has to be a recognition, I think, in our market that having strong financial core in an exploration and development company is vital. You can't make the discoveries until you can invest in drilling and finding those big discoveries. If you're going to make major discoveries, you have to accept that lots of the work that you do will not yield the discovery. I know there's an optimism every time when a drill program starts that you're going to slam through 10 meters of 2% nickel, and then the party is going to start. Right? It doesn't work like that. Most exploration fails. It fails because it has inadequate preparation. It fails, that's prior to drilling. It fails because the project is simply not good enough. It fails because drilling is not successful. This is high-risk stuff, especially when you're going deep, because if the drill kinks a little bit in one direction, you can miss your target. There's so many factors come in. You need such an amount of financial underlying strength in a junior resource company to be able to do enough work to deal with the misses or the non-optimal outcomes and go and find the stuff that you're really looking for. So it is a big part of our business concept of creating value on the balance sheet, because that is what we need. It's the engine of our ability to go and find the major metal discoveries. And we're not just looking for one discovery. And this is where it gets different again in our business. We're looking for multiple discoveries in multiple projects. And in the fullness of time, that requires a great degree of capital. It doesn't right now. Our capital, working capital it has been absolutely perfectly well managed, and our costs are perfectly well controlled, and we are not committed. We don't have guns held to our head on our projects. We can walk away if we need to. We don't need to worry too much now, but in 2 years' time, if the business grows as I think it will and we make discoveries, our capital requirements will be significant. So I need to make sure right now that in 2 years' time, we are building we have built to a point where we have a supremely strong balance sheet and we're able to push our business forward. It's not just about today. It's about 2 years down the road, a year down the road, 3 years down the road, and how we're scaling up our business, not just with discoveries, but with the underlying working capital to push our projects forward as those discoveries come in.
So this is about risk mitigation as well as long-term planning and portfolio building on a grand scale.
Yeah, it's not the Wild West, Mark. But it is out there. It's, generally speaking, it is the Wild West in the junior resource space. It's I come out and I tell you, we're going to strike big. And you go, ooh, really? And then I go, come on, everybody, buy my shares. And you buy my shares, you create liquidity, and secretly and quietly I go and place £1 million round the corner. And something that in our business, we've been very careful on financings, and we've tried to be honest all the way through, and we've tried to finance our business at the market. It's been one of my messages. If you buy a share today, don't expect tomorrow you're going to get heavily discounted financing, because you won't. Because that's unfair on you as an investor buying my stock on the market. But it's not the Wild West for Power Metal Resources. We're in a phenomenal space, the junior resource space. We have the best portfolio I've ever seen. I am completely biased because I built it. I think there is potential for us to drive our stock to levels that people don't anticipate we can do. And I think the reason why we can build to that point is because we're not just thinking about ramping our market, raising capital, paying high salaries. We're thinking about fundamentally putting all the building blocks in place for a strong, robust company that will last for many, many years and grow through this market cycle, along with the cycle, with some of the best discoveries that you could expect from a company of our size and scale.
And it doesn't concern you then that the focus may be taken away from power and onto the other companies?
Oh, no, because it would be a wonderful thing if we have a tremendous success and one of our spinouts goes up 50 times in value, okay? Yippee-dee-doo-dah. We'll sell some or all of the shares, and our balance sheet will swell dramatically, not just with investment value, but with cash. So, yeah, that would be fantastic. I'm looking in our business over the next 2 to 3 years of moving to a spin out a quarter. So we're going to have multiple holdings. It will be a full spin out portfolio approach.
So a spin out a quarter. How many do you think you might end up doing?
Well, in my mind at the moment, I think we have potential for, say, a dozen.
Okay.
And I think the majority of them will come from our existing portfolio. Okay. And you may look at our portfolio and say, well, you have circa 12 projects, so how does that work? Well, because it may well be that within one package that we would call a project, there are multiple licenses that, we might find something on one license that justifies its own listing and, that kind of thing. In the fullness of time, there is also a pipeline of other opportunities. Now, I don't particularly want to swell the business anymore at the moment. I think we have enough portfolio, we have enough diversification. But once we've actually spun out 2 or 3 things and the model is proven to the market, we may well take stuff in at the other end. And we're staffing up, or have staffed up, to create the team that will enable that to happen. So to a certain extent, we do become not quite a sausage machine, as it were, but we do become a creator of new vehicles. That means that with that portfolio of new vehicles, none of them, unless they have a blowout success, like a Greatland or a Eurasia type, massive success, will massively affect us as a business. I'd like to see them all grow. That's impossible, but if we do get one or two major winners, it doesn't hurt us either.
And how do you plan to manage this process then? Because I guess it's going to be pretty big admin task. You've got to put teams in place. You've got to go through the listing process. How do you plan to manage that?
It's funny, isn't it? Because there is, again, the expectation in these small junior companies that one person does everything. And I have an element of control freakishness about me, but it's not too crazy. No, we've been building the team to enable this machine to kick in and this value creation process to happen with some of the best people working with us to make it, an efficient process to take a vehicle, a package from initial stage through to listing. I mean, thank goodness we haven't listed any vehicles at the moment because, the markets are a little bit of a damp squib. If you bring a new vehicle on now, then everyone will be very excited about it. It probably wouldn't perform because 90% of businesses in our space are not really performing at the moment. We need our first IPOs to perform like a dream. We need them to come on the market at the right time, and then it will that success breeds success. But no, we've got the team in place to do it. Bear in mind, of course, that the listing process is heavily dominated by three main areas. Firstly, competent person reporting, which is the technical review of your projects by a specialised firm. They produce a report, they get on with it, and they deliver the outcome, which is a document that goes into the prospectus or admission document. Then you have the reporting accountant that does the working capital forecast. And again, that work continues and they crack on with their work and they deliver a report. Thirdly, you have the legal due diligence, which is the, checking that the licenses are in good standing and all that kind of thing. And that goes into the prospectus or admission document. Now, the extent to which you need other advisors depends on the market. So if it's the main market, then you will have a sponsor or a lawyer, or there's lots of different names for the various parties involved, helping you pull the document together. If it's AIM, you'll have a proposed nominated advisor that will help you pull the document together, the admission document. And if it's Aquis Exchange, you would have a corporate advisor doing the same thing. Now, all those different groups and people charge fees and do the work. So large amounts of this stuff is done by other people, not just by yourself.
And is it fair to say then that you're almost trying to build a mini Rio Tinto or Anglo-American?
It's quite funny because I did actually look at the Rio Tinto site the other day. I did it for marketing purposes, because it's always good to look at other companies and how they promote themselves. And we noticed that the Rio Tinto, if you look at the countries of operation, have quite a few different countries listed down. Then you can click on the country and you can see what projects are behind those countries. And I thought, blimey, this does look actually quite like our business in terms of multiple countries of operation. In some countries we have one project, and in some countries we have more. And they are taking a portfolio approach. And I suppose the generic investor view is, well, they're entitled to take a portfolio approach because they're a very large company and that's exactly what they need to do. And I would say, but why are we not entitled to take a portfolio approach too? Why are we not entitled to think big? And why am I not entitled to think I can build my company into £1 billion company with, fundamental business principles well in place, good management, good communications, good finance, a good, strong, diverse portfolio that is chock full of district scale potential interests. I do genuinely think it's the best portfolio I've ever seen. Gritty determination of the team involved. Everyone in our business works like I've never seen anyone work before. They're all the same. We don't have much downtime. We just keep going because we're on this relentless drive. So if I want to dream big, then I'm entitled to do it. And I'm not doing it vacuously because I've got the largest shareholding declared in the business at the moment. Right, so I'm doing it on the basis of being a shareholder. I've sunk, getting on for, well, I will be soon, over £500,000 invested in the business of cash, there's every reason for me to want my business to do very well. The only downside I have is I'm a director. So if you're a shareholder, my share price goes up 20 times. You can sell the stock any time along the way. As a director in the company, I'm not as flexible, so I have to create fundamental underlying value that sticks with this business, rides through the cycles, and ultimately at the end of the process has mechanisms to distribute that value to its underlying shareholders in a way that I can benefit from as a shareholder as well as a director.
Mm-hmm. And in your mind then, what is your timeline for success?
I behave just as a private investor, in the sense that I want the returns. I've been in this market for 12 years, and this current phase, we're now August 2021, and this phase of pullback I'm perfectly used to. I'm not panicking. I'm not worried about it. I'm frustrated because it's like having a job. In my business, I have a job appraisal every day, sometimes 25 times a day. And when the market's on a pullback, I could work for 12 hours and do some great work and think this is really good for the business, for the shareholders, and then people say, nah, it's rubbish. Share price is down 7%. I go on social media, I look at the recommendations for how we should improve the business and what we're doing wrong. I see comments like, we're a scattergun approach. Well, scattergun is a phrase you use because you don't understand the fundamental way the business is being built, which is portfolio, risk management, diversification, building financial strength, building company strength, and then ultimately focusing down on those major areas of success as they come along in the business. But you read things like this and you think, okay, you see that, we should do this, we should do that. And we're in that phase at the moment where people's frustrations are coming out, people are worried and concerned. But I've done this for so long now, I just head down, keep going, keep focusing. Do I think our business is worth 2p a share at the minute? Well, yes, because the market has decided that. Could this business be 22p in 6 months' time? Yeah. I look at what we've got within this company and what could happen in the next 6 months, and I think, yeah. Am I going to use that as a ramp to get everyone excited so I can go and surreptitiously go to one of those lovely brokers in the city and raise a quick bit of money? And, no, that's not my philosophy. Bear in mind, in our business, the last time we did a raise was July 2020. If I was a normal raise monkey in the markets, we'd have done 3 by now. If I had to go to the market and raise money, would I do so? Yeah, of course I would. Could I do so? Yes, of course I could. Get offers all the time. How would I do it? Protective of the existing shareholders. Why? Because I'm the largest shareholder. It's not rocket science. But I think now, in this time of frustration, if I have one lesson for my personal private investment career, and back in 2009, I started with like a few £1,000s in the junior resource space. It might have been close, £7,000-8,000. And I had nothing else to invest. I wasn't doing too well financially or personally, in fairness. But now, 2021, so 12 years later, you can work out what my position is in Power. In Power, I hold 64 million shares, and I have about 30-odd million warrants from previous financings. I've participated in all my financings in the company, and I have 40-odd million options. So circa 140 million financial instruments, I call them. Shares, options and warrants. At this moment in time, that's worth around £2 million if you count the share value and the profit margin on the warrants and the profit margin on the options. It's a big position. I'm not overly worried about it being a big position because I actually think it's quite a small position in terms of the business and it should be worth a lot more. But I've done reasonably well over 12 years to build to this position. I have other investments as well, but my kind of biggest is POW, to be honest. and that's with good reason, because I think it's going to be the best performer out of all my portfolio. But right now, based on all my years of experience, I think in these down phases, the biggest thing the investor does is back away from the sector, because they think it's never going to come back to life, and it will. The thing that investors should do is look at the portfolios and see which of these companies do I have the most confidence they will rise and drive higher when the sector comes back to life, and then reposition your money. Get out of that stuff where everyone's gone quiet, where the directors have been hiding under rocks, right? Just get out there. If you believe in your story, you keep marketing through the down phases, as we've done at POW. We put announcements out about our business all the time. We don't stop our activity levels because it's a bit of a down phase in the market. We don't go, oh, no one's listening, so we won't say anything. No. We keep pushing out, because the stuff we do now is getting noted by people. Investors are not stupid. They read the stories. They might not have the confidence to buy the shares, fair enough. They might not have the money to buy the shares, but they are watching. You get your message out and you're ticking those boxes in investors' minds. And when the sector kicks into life, to use a corny phrase, when the tide comes in, all boats rise. You just want to be sat on the speedboats, not the small dinghies. I want this business to be a speedboat, so that when the tide rises, we shoot ahead, way ahead of the others, and we grow far faster than your boring, mundane business can be. And I think investors, if they can do themselves a favour, stay in the sector and buy into those shares or put the money in those shares that are going to be the real performers.
Okay, that's good advice. So when the tide comes in and all boats rise and you want to be a speedboat rather than an oil tanker.
Never been in a boat, apart from a ferry. I don't know why I use that analogy.
You talk there maybe in 6 months' time, power could be worth a lot more than it is currently. What key things are you looking out for then amongst the activities with the portfolio of Power Method Resources that will help that transformation?
Yeah, okay, so we have a limited pool of capital to deploy, so we have to make sure it goes into the good stuff in our business, which may not be, and the best stuff may not be what investors are necessarily focusing in on. I do have this challenge. I knew I would have this challenge, that when we built our portfolio, North America, Africa, Australia, that we would have a larger portfolio than the market could easily understand and engage with, and we would have to communicate through that period. We'd have to work through that period. And as the discoveries start to come in across our business, in different jurisdictions, in different continents, people will go, blimey, okay, I could see this being formed. I didn't entirely get it and understand it at first, but if we drill in Golconda in North America, and we find that very high-grade near-surface gold from his historical work is demonstrated with a big kind of 2 or 3 holes of gold discovery, and then that will make sense. We drill Kanye in a joint venture with Kavango in Botswana and the Kalahari Copper Belt. People will say, I knew Paul had been involved with Botswana before. I've seen, the success that T3 generated for Metal Tiger MOD and sold out ultimately to Sandfire. I could see what he was doing. I just didn't think that the lightning could strike twice, and it does strike twice. Then that will make people go, oh, okay. And then ditto, if we're successful, we put the holes in, and then there's a big, rare earth discovery. They'll go, he's talked about this for a long period of time. Australia, we've sat ourselves in Victoria. Only just has there been an announcement from Fosterville South, just to the east of one of our major license blocks called Kilmore Project, where they found 11 meters of an ounce of ton gold. We sat ourselves in the right places, and then we will do our drilling, various areas in our portfolio in Australia, and we'll find something significant, I'm sure. And then the market will go, there's another one. And then in the FDR, in the Patterson, where we're targeting Javieron type, Greatland Gold type discoveries, we've got deep drill targets that could yield major discoveries in the space of 1 or 2 holes. It has that potential. If we get lucky with those holes up there, then the value that will be generated will be disproportionate. And people will say, I saw the story. They talked about the story, and what they were looking to do. So I think we will see much more strength as we move into the autumn in our space. natural resources, and then through into next year. I think our business is perfectly aligned with its exploration work and particularly with its drill programs planned to marry up nicely with a growth in positivity in the junior resource space. And I think we have a phenomenal shot, the best of any company I have seen, of having multiple discoveries in our portfolio in the near term.
So you're positioned very well, you feel. Market conditions should improve, particularly in the mining and exploration space, the commodities space. Fundamentals really tell us that that is going to happen. It's more a case of when, not if, we see a big swing in the commodity space. And you're exploring, waiting to get that major metal discovery.
And it's all about timing. Because if you release the right kind of news at the right time in the market cycle, you have a disproportionate effect. You can release the same news when things are not going particularly well, like now, And if you get the timing wrong, then you don't get the returns. We have got to, as a business, we've got to respect, amongst all the other things we've talked about, where the market is. And there's no point worrying about, there being a frustrating down cycle or down phase in I think is ultimately a very strong bull cycle. But I have to accept that the news I put out to market right now will not get the recognition necessarily that it would do in a positive, upbeat phase. In the last week, any one of our announcements in the last week that we've put out could have seen a 50% go in our share price in a more bull phase in the market. That's 200%. We've released 4 things. And it doesn't. So what am I doing it for? I'm doing it because putting news out is the best way to say to the shareholders, we actually give a toss. We are doing things and we're telling you about it. I'm doing it because I've had 12 years experience of this, and I know that people have memories. Investors have some of the best memories going when it comes to positive news flow. We lock into positivity. So it's going in, and people will be seeing what we're doing. They might not have the financial capacity or willingness to buy at the moment, but they're lining up because they see the story emerge. And that is our ethos all the way through. And I also think the fundamentals of the market are absolutely clear. It's not speculate. Back in 2009 to 11, it was speculation, I think, of a Chinese driven super cycle. No one really knew where it was going and what would happen. And we thought, as investors, private investors, a private investor in my case then, that 10 was a phenomenal year. And we haven't had the 2010 experience in the UK market yet at all. And then 11 started really well, but then we had the European crisis and things went off the boil. And the super cycle didn't really kick in. But we didn't have anything then like we have today, where you have American president talking about a massive infrastructure bill. And all the Western governments talking about massive infrastructure spend. The Chinese government talking about enormous spend on infrastructure. We know there's a massive amount of demand coming. The EV green revolution is going to drive dramatic amounts of demand. I saw an article in the FT that was effectively saying that in order to get to this point where we can say, we have a green world, we're going to have to dig copper and nickel and so on out of the ground. And lots of the concerns about environmental related issues that have been really putting the pressure on resource projects and might have to be adjusted to enable the metals to be produced to support the green revolution. Well, I think most companies and most projects will still be mined in an environmentally positive way now. I think it's just the way the world is, but it shows the level of demand that's coming. And there hasn't been the supply built over the last 20 years. It's just not there. So we have high demand and low supply, and it will catch up eventually as metal prices rise. But as commodity prices rise, because they have to, then the juniors in particular will see disproportionate increases in their valuations, because what they're looking for and what they might have will be incredibly valuable. And so we will have proper valuations. So you think 50 million quid on a junior resource exploration company is quite peaky at the moment as a value. It's going to be nothing in the future. It's going to be the entry level for a new resource co listed in the major markets, I think. And I think we go into hundreds of millions for decent companies, and those that have real successes, we're going to see billions on the valuations.
And that's where you're heading.
And that's when my crystal ball gets really foggy.
Well, Paul Johnson, the CEO of Palmetto Resources, thank you very much for your time.
Thank you, Mark.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.